Morning, everyone. This is Brian Wagner, Chief Architect of Prodigio RTS. Welcome to today's chat. We're going to talk about some introduction to technical analysis and how it's applied to Prodigio and specifically Wizard Lab. Today's chat is going to be a more introductory type of chat where I'm going to talk about some basic concepts of things that you can do using Wizard Lab, but more importantly, kind of how to wrap your mind around this world of technical analysis. So I'm going to start with some pretty basic examples, but you know, as always, these chats, I always try to present a new angle to everything, perhaps to spark new ideas, etc. So it should be fun for everyone. So this chat, as always, is archived on the Prodigio website. That's out on www.prodigiorts.com. And follow us on Twitter, twitter.com/wizardlab. Join us here every week at 11 o'clock Central and 12 o'clock Eastern Standard Time for the Prodigio chat. So I'm going to get started. Today we're going to talk about technical analysis, about support, resistance, and how you kind of tie this in to automated trading systems. Prodigio is the automated trading system offered by TD Ameritrade and thinkorswim, which has the Wizard Lab component, which is a completely drag-and-drop user interface that allows you to create robotic or semi-automated trading strategies. Nice thing about Wizard Lab is there is no scripting required. So Wizard Lab is completely drag-and-drop. It's a system of inputs to outputs. And so you can define basically how the strategy transforms the inputs into a series of scan results and automated trading signals. So once again, that website is www.prodigiorts.net. So let's start talking about technical analysis. Technical analysis is its own world of, there's so much information. There's books that are, 5 inches thick about technical analysis. To get started with technical analysis, and especially a lot of you are pretty consistent day traders, etc. Really, it all stems from looking at charts. And so, I look at a price chart. For example, I'm looking at a 15-minute chart on SPY, and there's a whole world of things that you can add. Various oscillators that tell you different things. Price relative studies such as a moving average, which kind of translates price in a different way. And there's also support and resistance. And support and resistance is a very, very interesting concept in trading because, first and foremost, it's one of the things that's most talked about. Probably one of the things that's also the least understood, well, for good reason, because oftentimes it's very subjective and it's usually a kind of a translation for the broad state of the market, the economics, the news, etc. But when I talk about support and resistance, let's take a look at a daily chart, for example. Now, support and resistance is going to be interpreted according to who you talk to, right? And if you always want great advice for analyzing the markets in terms of support and resistance, listen to the Shadow Trader chat because they really do a great job. They've been doing it for a very long time, and so those guys really give you a good opinion. But if I look at price movement on a chart, I can very subjectively pick my points of support and resistance. Now the concepts are very simple. Support means it's some kind of threshold, some kind of level where people who are trading the instrument, they don't want to trade it for less than that amount. It's something tied in with the intrinsic fundamental value of something. So in other words, I look at this price chart on SPY, and I can remove the simple moving average here. You notice how the price, it's making lower lows, but it kind of hits some kind of level here, right? So at around $109.75, it hits some kind of level, some kind of mysterious level, right? And then price kind of bounces back with the market. It kind of tests that level several times around this 110 to 112, $113 level. It retests it again, and then it kind of bounces back off of it. There's a very human reason why these concepts keep recurring. And it's because, first and foremost, these markets are traded by people. And second of all, you always have this constant wrestling between bulls and bears, between people who want to acquire the instruments versus people who want to liquidate the instruments and, shuffle around their portfolios respectively. But this market, which is kind of this world that we kind of play in, where we're looking for opportunity, where something is, if we, for example, take long positions, we want to buy when something is at a bargain, and we want to liquidate later on when it's worth more than we acquired it for. On the converse, if we're shorting stocks, we want to short it at a high price, and we want to cover that short at a lower price. We're always looking for opportunity. That opportunity has limits, and that's the whole concept of support and resistance. There are reasonable limits which are kind of manifested from the way that we trade on the market. And it's just based on common sense and kind of the way of the world. I don't want to sell you SPY for $50 because you can turn right around and sell it for $110. I'm losing money if I sell it to you for $50 a share. I'm losing money if I buy SPY from you at $200 a share. That's just completely outside the range of trading. So support and resistance, it's kind of the technical study of where these seemingly arbitrary levels exist. And if you are just kind of the semantic trader, the person who looks at charts and you take advantage of your own experience and your own intelligence, you start to do things like this, right? And so let me try to put some trend lines on here. I take a look at this and I see a very clear threshold here, right? Now this is just me looking at price movements and kind of arbitrarily picking the lows. I see on this movement that I had some support down here, some declining support between these two lows, and I could expect certain things, such as if the price action got closer to this level of support, I would expect it would be difficult for the price action to continue diving through the support. I mean, when it bounces up, it's much easier for the price to come back closer to the former level of support than for the price to continue skyrocketing off in the direction into the opposite force, which is what we call resistance. And just like I kind of drew this seemingly arbitrary level of support, I can do the same thing for resistance. And the way I can do this is you really you can eye this up, and you can do a very good job just simply by eyeing it up. Right? And this is why we're going to start with just eyeing it up, and then we can talk about kind of more advanced ways to do this automatically. I can draw a trend line. I see kind of a high here, and then another high here. And every time it kind of hits, now a line is 2 points. Line's always exactly 2 points. But I can kind of use this kind of fuzzy evaluation where I kind of joined this point to that point. And you see what generally happens? This high kind of tests that support line. This high also tests it, which is actually very revealing. When you have support and resistance, the price action, it kind of tends to bounce off of the support and resistance lines. And this whole concept of reaching the limit and bouncing off of it is something that it repeats itself. It happens frequently in trading. And if you look at the data in multiple views, you can kind of find these recurring pattern setups. So there's kind of many levels to look at this, right? There's what I just did, which is kind of the layman's approach, right? I just used my best judgment. Anyone can do this. You can do this. You can, look at a chart. You can look at the price action on the chart, and you can kind of use your rule of thumb to say where the general levels are. And that's kind of like the first step. That's the level one. Anyone can do this, and it's actually kind of valuable. I can change my bias on the market. For example, if I am looking to do an action on SPY, I might say to myself, well, according to this channel that I just built, the price action, it's kind of coming back to that resistance. And I can reasonably bias my trading to say, well, either it's going to break through that level or it's going to kind of meander off to the side, and when that happens it might fall back closer to the support. It appears that I'm kind of in a down channel based off of these support and resistance lines, but my trading can be affected by this. And so on the other side of that, if I see the price action kind of break through the resistance levels, I might decide, well, what happens is we've reached a new level of trading. Right? If I see this price action break through this resistance and it continues trading up there, I might say the fundamental value of the markets have changed and my trends are going to react accordingly. When you go beyond this level one type of analysis, that's when you get into the analysts. And so people like, for example, Brad and Peter, who, and Tom, who manage all are tying in all of the economics. They're tying in economic fundamentals, stock fundamentals. They're running scans, and they're kind of analyzing all of this data in one common pool, and they are kind of presenting more ideas than beyond this kind of first level. And they might see things that might not be visible on the first glance, such as taking into consideration longer term trends, longer term support, longer term resistance, or the news, which is another thing to pay attention to because economic events do move markets. And so the point about the support and resistance is that there is no mathematical definition that's going to give you the support and resistance lines. Right? Now that said, you can use the mathematics in order to generate levels of support and resistance. Right? So the first example that I'm showing you here is kind of this level one where I'm just picking peaks, they call these peaks, the high points, and troughs. These are the valleys, right, of the price action. And I'm really just bounding the range of trading into something that makes sense for me. You can do this on your own. You can get analysts' advice. But this is one way to kind of automate your trading. And I'm going to show you how to use Wizard Lab to kind of pick exact price levels on single instruments. And that's kind of the first step to automating a strategy. The second step would involve kind of the more sophisticated analysis. And I want to give you some ideas here before I get into actually building rules with Wizard Lab. So this is kind of my first idea, right? Just plotting support and resistance. Let me take these lines out, and I want to show you the next idea. The next idea is using some kind of mathematical know-how in order to automatically tell you where levels of support and resistance are. So for example, one of the most popular methods to do this is by looking at pivot points. Right? So I want to talk a bit about pivot points and how they are a technical analysis driven support and resistance. So for example, let's go into Trade Vision. And in Trade Vision I've got kind of this matrix view of a number of different ETFs, a number of different indexes, etc., that show me various pivot point levels. Now I want to bring one of these up on the chart. Right? So I was looking at SPY. Let's load the SPY pivot points for the current day on the chart. Now these are daily pivots. So I actually want to look at intraday data, and let's look at something that's a little more populated here. I'm looking at 5-minute charts. And on this 5-minute chart, I've got these horizontal lines that are showing me the pivot point levels. What a pivot point is it is mathematically formulaic calculations of support and resistance levels. they're based primarily on the trading activity of the prior day, specifically what's known as the typical price. Typical price is the high, low, and close values of the previous day divided by 3. And what that does is it gives you this kind of median level, right? So the pivot point, it's kind of like the balancing level of the trading activity on the prior day. Pretty much all of the pivot points are driven by this, but if you have this general pivot point value, you can consider what is support and what's resistance compared to the prior day trading activity. And it's all driven by the idea that price movement, it tends to have strong locality. Right now, locality, that's kind of like a buzzword, a technical word. Locality, in terms of math, means things are near each other. Right? It's kind of within relative proximity to each other. When I trade in the next trading day, the dollar amounts of the trades are going to be in the relative proximity of the prior day. It's in the ballpark, is what that means. Now, when I look at this 5-minute chart on the SPY, obviously this gapped up heavily. And this is probably related to the economic news that was happening in Europe. But when this happens, even though it gaps up by $3. It didn't, especially on a ETF which follows the broad market like SPY, which is following the S&P 500. It's not gapping up by $300. Right? The price didn't go from 120 to 420 overnight, especially not without a split or anything like that. Support and resistance is used to kind of measure the degree to which the price action is breaking through resistance or falling underneath support. And in the pivot points, you have 3 thresholds. And because of this gap, it actually broke through all 3 thresholds, and you're trading well above the R3 level of resistance. All right, so when this is happening, pretty much with respect to the daily pivots, because this is showing you daily pivots, it's saying something completely significant has totally changed the threshold of trading today versus the prior day. And so it's almost like if you were looking for reversal patterns, you should just drop that idea for today altogether. Don't really look for reversal patterns. Look for things that kind of continue the trend, or look for kind of the more momentum type of plays. But these levels kind of give you an idea of how the trading activity happens, and the further away you get from the pivot point, the more, the deeper you get into resistance and support. And these calculations are based off of some general mathematical ideas, such as it looks at ranges of, say, the low of the prior day. It looks at, say, the low of the prior day plus, say, half of the range between the high and the close. And you can always look at the actual definitions. Shadow trader pivots, which are kind of the shadow trader definition, they're available on shadowtrader.net in the glossary. He actually gives you the complete formula so that you can kind of calculate these by hand. But again, you can use these kind of immediately inside of Wizard Lab. So the idea is you can create systems that react to support and resistance. And you can do various things such as waiting for the price to break through a level of support or resistance in order to get out of a position. You can wait for price to breach through a level of support and resistance in order to fire a signal or get into a trade. These support and resistance levels are something that you can use kind of right out of the box because they're already calculated. But another way to use kind of support and resistance levels would be to automate something. And in addition to the pivot points, one of the simple introductory ways to do this is by using a study that we call Bollinger Bands. And this chat is not going to be an in-depth discussion of Bollinger Bands, but I want to kind of demonstrate how you can perceive Bollinger Bands as levels of support and resistance. And in order to do this, I'm actually going to zoom in past the gap And I'm going to kind of change the axis. Let me drop this down to 1 minute data, and you can kind of see this a little bit better. What a Bollinger Band is it's another way of giving you a range of trading action, a range of price action. It's based on moving averages. It's based on standard deviations. A moving average is nothing more than an average of price, so it's a line that averages the price values, and it tells you what the average price was over the past number of periods. A standard deviation is just a measure of something we call variance. It measures how far away on average data points move away from its average. Right? That's really all it is. You can think of it as a level of volatility measure, or the shakiness of the price points against its average. But what it does is it gives you this band, and the band literally says that the price typically trades inside of this band. Now, it's not always inside of it. It can dip above and below, and these bands are parameterizable. For example, this band is based off of 2 standard deviations. The general rule of thumb is that 95% of the data points are typically going to happen within 2 standard deviations, 2 Bollinger Bands outside. If you drop it down to 1, that's around 67% of the data points fall within 1 Bollinger Band. And it's not linear. It's kind of it's based on the idea of a normal distribution, where 3 Bollinger Bands means 99.7% of all the values fall within 3 Bollinger Bands. So 2 is usually the good rule of thumb one that people like to look at on the chart. But it is a form of support and resistance level, because when the price action gets closer to the low Bollinger Band, what it's saying is that the price is trading at the bottom of its range according to the resistance defined by the lower Bollinger Band. When the price action comes back to the top near the upper Bollinger Band, it's saying I am hitting resistance. And you can interpret where the price is with respect to the Bollinger Band in the same way that you interpret support and resistance lines. And so you can create strategies for support and resistance kind of using the same concepts, no matter if you're looking at just a vertical line, a trend line, or a Bollinger Band line, etc. So let's take these ideas and kind of walk through how you can automate some of these things using Wizard Lab. So let's take a look at the daily chart again. And again, a lot of interesting things have been happening in the past couple days. But I'm going to take the Bollinger Bands off, and I'm going to start with some of the basic ideas here. Right? So let me take a look at some trend lines. I'm actually going to start with a horizontal line. Right? And you can do this, for example, pivot points are based on horizontal lines. And I can kind of pick lows and highs, and I can use these as support and resistance levels. Right? So just like I was doing before with the trend line, I'm kind of building horizontal lines on the on SPY here. And I'm going to pick some lines, and so I see these are some trading lines. Here's my absolute low within my viewable range, and if I put another horizontal line here, I've got something which has kind of 3 levels of support and resistance. Now, where's my price action at? It's right here today, right? It's at this $124 level. Within the past 2 months of trading, I had an absolute high of about 129, almost 130, well 129.42. I had an absolute low of about 107.43. You can always right-click these, and you can kind of tweak them. I'm extending them to the left. And I can also configure these, make these a little thicker. And I usually like to do this just to make them stand out a little better on the chart. And one more. And so the idea here is I've identified 3 price levels that if price action breaches or gets near those price levels, I want to do something, right? I either want to give myself a signal to say go long, go short, or to automate a strategy to get out of a position. So these 3 levels, they have 3 different prices associated with them, and the chart is kind of showing me what those levels are, right? So let's take an idea, and this idea can be anything. Suppose the idea is if the price action gets back to this upper level, I want to give myself a signal, right? And this could be a buy signal or a sell signal, it doesn't matter. But also, if the price action comes back down to this this support level right here at 116.20, I can give myself another signal. Perhaps I want to create kind of like a channel signal, right? A channel signal would say if price gets up to this line, I would expect to get a short signal. But if price comes back down to the support line, I would want to give a long signal. So let's build that strategy to kind of give me the signal in trade optics. So I'm looking at a chart, for example, that's only looking at SPY. Right? So let's go into Wizard Lab. In order to create this strategy for a specific symbol, I want to do a couple things. First and foremost, when I build rules in Wizard Lab, I have this toolbox on the left, right, which starts off with a lot of different things. I have source data, I have technical analysis, patterns, etc. This is kind of where I get all of my studies from. Everything that I want to automate kind of starts on the left, and the idea here is you drag it out to the right onto the canvas. It creates a node, and from that node you connect outputs into inputs, telling the system how it should calculate values and fire signals. So what I want to use in this case is a single OHLC for SPY. And what that will do is it will isolate, for the symbol SPY, data as it comes into the system. And if I want this to trigger intraday, I should drop this down to a smaller interval, such as 1 minute. And what this will do is every minute, as data comes into the system, it's going to send those OHLC values, just like you see on the chart, into some kind of calculation. Now, what we're going to do is very simple. We just want to say, give me a signal if the price breaks above this level of, I'm going to use 129.42. That's my horizontal line for my resistance level that I had drawn on the chart. So I'm going to take that number, 129.42, and I'm going to express this in Wizard Lab by saying I want to use logical operators. When my price crosses above, right? So what I did was I went to logical operators. I took the cross above study, right? I dragged it out onto my canvas, and I connected the output into input A of the cross above study. In order to represent that line, it's really nothing more than a constant value, right? So I'm pulling out a constant study, and I'm just changing this value to whatever the level is that I'm interested in. And in this case, I think it was 129.43, and I have to double check that. 129.43, I'm sorry, 42, 129.42. And just like I would using a scripting language, I'm really kind of defining what the script would do to say, I want to know when that price crosses up above 129.42. And it's much easier to speak, as traders in terms of crossing above, crossing below, or in terms of the raw technical analysis indicators than it is to say if statements and branching conditions, etc. You end a rule by dragging out a signal study, which comes from this trade actions box right here, and I connect the output into the input. And when I do that, I have a valid rule, right? So When everything turns green, it tells me the rule is valid, and what I can do is I can save this as a rule, and this is really going to say, I'm going to call this SPY, because this is specifically for SPY, crosses above resistance. I'm calling it resistance here because I can come back in later and I can kind of change the values. I can reuse this as I want and really change this constant, which represents my horizontal line of resistance. So I've created this rule. It's very simple. It's only 4 nodes. And the next step, in order to use this, as I mentioned before, I want to use this in trade optics to give me signals. I'll go into step 2, the strategy builder. Right, I'll scroll down into the scanning rules, and in here I've got SPY, crosses above resistance, and all I'm going to do is drop this into my scanning rule. I'm really not going to do anything else with it because I'm only going to use it in trade optics, and I want to keep it as simple as possible. So like I mentioned before, if I want to create this kind of channel strategy where if the price action comes back up to this line, I want to get a short signal, then I can go into Wizard Lab and I can change this trade side to sell, right? And then that is going to give me shorting signals. And I can use this in multiple ways. If I create an automated strategy, this could actually place a short order to sell the stock going into a position. I could then define the parameters of this order by saying, for example, I want to go in at a market price, I want to go in at limit, etc., and I could tweak the various offsets of this limit order. But I'm just going to use this as simple, market order. This is going to give me a signal in trade optics. Let me save this, and I'm going to call this SPY crosses above resistance. And what I've done is created a strategy that I can now use in various contexts. I can run this in backtests using the backtesting system, and there's all kinds of parameters that I can tweak my backtest to do different things, such as the most important is the simulated versus the raw mode backtest. Simulated mode is going to actually use some portfolio settings to manage a simulated portfolio. Raw mode is going to ignore that and just give me the signals, which is extremely useful when I'm kind of testing where my signals happen. But what I'm interested in is deploying this strategy to trade optics. Right? And so there's always 2 different ways to deploy a strategy. The first is into RTS trading, which will robotically trade the strategy according to the risk parameters specified by Prodigio's RTS settings, which is really available in here. You can kind of define how the system should robotically trade. And then there's trade optics, which puts your signals into this queue. And so right now I'm not scanning for anything, but I usually kind of check a couple of these off, just to get some signals coming into the system. But the one that I had just created was a short strategy, and I have to, because this broadcast kind of has some difficulties sometimes, I have to minimize my resolution here. I have a short signal here, SPY crosses above resistance. And the last thing that's very important to mention is that when you deploy a strategy, either in RTS or into trade optics, when I check off this SPY crosses above resistance, it deploys it against a symbol list, right? And so, for example, all of these default to this kind of S&P 100 symbol list. If I want signals to come on only one symbol, I create a symbol list that has the one symbol inside of it. Right? And I'll show you guys how to do that in a second, but I have this symbol list which has SPY, and I check it off, and now the system is scanning for the short signals on SPY using that resistance level. Right? So this is trade optics, which is focused only on finding the signals. And when I collapse this, you'll notice that some of those other strategies that I had checked off, they are more frequently scanning strategies. Some of these scan every minute for some rather loose conditions. These will come in more frequently. Obviously, this strategy that I set up on the SPY, this isn't going to trigger today, or it's probably not going to trigger today, but if I leave it running, I might get a signal into my trade optics when this occurs. And when that occurs, the signal comes into trade optics, right? And so I can have, for example, short signals coming in based on my resistance line. And what I can do is I can also create a rule for the support, which is as simple as changing the cross above to a cross below. And I would also want to change this threshold line, right? So for example, I go into the Chart Trader Pro here, and I've got this other threshold level, 116.20. All I need to do is change this to 116.20. I could save this as a different rule, right? That's where it crosses below support. And I haven't connected everything here, so it tells me it's not complete yet, right? So I want to save that. And I could then go on to build another strategy using the support line. And so if I am just deploying into trade optics, this is only going to give me a signal. It's not going to be an automated trade. Right, so let me save this. SPY crosses below support. And I have kind of two strategies now. And if I go right over into trade optics, I could check this one off as well for SPY crosses below support. And now I have both of these support and resistance lines scanning on the chart for when price crosses those two levels. I mentioned before that you need to make a symbol list. The easiest way to make a symbol list is to go over into your quotes tab, and you click this edit symbol list button right here. It brings up the symbol list editor. You can create, say, a new list, give it a name, and I can name this whatever I want. And it's as simple as just adding symbols into your list. So for example, I could create one for the Qs. And if I save this list, actually I should call this Q, QQQ. Let's save that. I now have a symbol list that only has the Qs in it. Right, so this symbol list, when I use this throughout the system, will only have the Qs. Here's my SPY list. You can kind of bring this up in the quotes directly, and you can kind of modify it right in here directly. It's as simple as that, but that's how you create one symbol lists. You can set up this system to scan for technical analysis and, more importantly, support and resistance-based analysis on a collection of single symbols. And this becomes very useful, for example, when you listen to the Shadow Trader broadcast, or you're doing your own analysis and you're running your own scans and you're kind of drilling down on your own trading ideas. Right? And when you kind of drill down on concepts, let's see, waiting for audio to come back in. When you drill down in your own trading, right, usually you step one, you perform a scan, right, or you are searching for trade ideas. You search for ideas based on the breakdown of the markets, etc., and you look for opportunities. When you have the results of your scan, you can then inspect individual price movements, technical analysis, and price action by looking at data that's coming in on all kinds of information, such as charts. I can look at fundamentals and my own research, etc. So when you start to collect your ideas, you have this continual process of drilling down until you get kind of a handful of ideas. And when you have those handful of ideas, you want to try to execute based on opportunity as efficiently as possible. And so once you've done your scanning, and I'm going to kind of touch on that in a minute, you have your result list, and then you want to automate aspects of that scan list. And some of those are by performing the support and resistance analysis. looking at pivot points, looking for gaps and opportunity. And you can automate this within trade optics and RTS strategies, which I'll touch on, by taking individual ideas based on individual instruments. You know, let's say I had a idea, a trading idea on Baidu, and let's say I knew I wanted to say enter into a short position. What I could know is that there's kind of this, oh, that's a vertical line. What I could know is that there's kind of this general level of resistance here, and if I extend this left, and I could set a system up so that if the price action gets at or close to this level, I could give myself a shorting signal. And so by working with it in steps, you can use this single OHLC combined with single symbol lists to create multiple strategies that look at individual trading ideas. And that's actually kind of a common thing that people ask, how do I do this in the system? Some of the early examples that we usually use are show how to do a moving average crossover, right? And so I'll probably wrap up with that because it's very rudimentary, and some of you guys in here are probably sick of seeing that, so that's why I kind of took this new approach in this chat. But that's how you can set up the system to look at individual ideas. Now, before I show RTS and how to kind of automate target and stops, I want to talk about the scanning system that we're building. We're working on this scanning system, and the scanning system, more and more features are coming in all the time, which kind of puts us back a little bit. But what this scanning system does is it automates that first step for you. What we're doing is we're creating a system that kind of immediately gives you the result set based on it's more than 1,000 different technical analysis conditions and fundamental indicators. And so the system is set up in a way so that it's a tiered server-side architecture, so that when you want to run your scan, you go to the scanning component in Prodigio and you say, okay, I want to drill down based on this, 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 and this. And you get your scanning result set immediately, like less than a second. If you decide, okay, I don't want to look at that anymore, I want to look at this, you just kind of uncheck one thing and you check off the other, and you immediately get your results back. This is the system that we're building to kind of facilitate that first step and to get you that first set of results that you could then drill down on, which is why I kind of focused on support and resistance today. That system is in the works. It's kind of more or less in QA right now. So that's going to be coming out very soon. We have to time this correctly so that we have the most effective release possible. That said, another great source is, like I mentioned before, Shadow Trader, to find your trading ideas. Those guys really present some interesting ideas, and the analysis is really great. So that's another resource that you have in order to get these ideas. But let's suppose you have a Prodigio idea, right? So you did step one, the scanning. Step two, creating the strategy. Step three, you want to robotically automate this. The way that you do that in Prodigio is by refining the strategy a little bit and then deploying to RTS trading. And I want to talk about how you do that. So here, this was my strategy that I just created up. I just set up where the SPY crosses below my support level. So remember, we were looking at SPY, and we wanted to trade when it crossed below the support level. When I trade this robotically, let's say I want to go in at market. Usually you want to attach to these positions a target and a stop. And so what that requires in the strategy builder is adding more to how I manage a position. Everything in Prodigio is position based. And when I look at this portfolio, it's a simplified view of all of the positions that I currently have inside of my portfolio. And this is set up so that it's very easy to kind of rapidly I actually docked off my order management off to the side here. You can rapidly kind of go in here and I could close out this position by selecting it on my portfolio and closing it. But this portfolio is a representation of what's managed in an RTS strategy. And you do this in a couple of steps. So getting back to Wizard Lab, I want to add a stop to my position. Let's keep it simple. You can add multiple orders, but let's say I want to add just one stop. I go into this management section under my order rules and I pull out the order rule. I drag it into my management close position, and that gives me an opportunity to set up orders that should be sent immediately after it gets into position. One of those orders is a very simple stop, and I could say send a stop order in, and you always have to set an offset here, but this would be a long position, so I want to send a stop at maybe a percentage below the position. So let's say I use 0.5% stop. I strongly recommend you use the percentage-based stops, because when you automate strategies, the price levels are at all different levels depending on the instrument that you're trading. So in order to give you an idea, we kind of have this example pane down here where it says, okay, for example, a position opens up at $50, right? And this gets truncated on my very low resolution here. If a position opens up at $50, it's going to send a stop order to sell at $49.76. It gives you an idea of how it's going to work. It's more important for the percentage-based amount, because for the absolute price-based stop orders, this price is just in terms of pennies, and so that's going to be 11 cents under the open. So this price that it opens up at, it's actually $50.01. So if I put a stop order 11 cents under that, it would put my stop at $49.90. That becomes a little less obvious when you use the percentage. Right? So what is 0.85%? It says, well, that would be about $49.58. And by putting this stop order here, if I save the strategy with that management rule inside of it, when I automate a trade, it's immediately going to place a stop order underneath the long position. So the way I do that is in step 4 under deploy strategy. If I go to deploy to RTS strategies, I can scroll down, and that was my, well, I should do this in order. You can click for instructions here, but it's really just a couple steps. You really just go through this panel. And we added this trading expiration date a while ago, which is very useful. This really allows you to establish a date for the robotic trading to expire. Right? So the idea here is, let's say I enable RTS trading, right? And I say, okay, if I click RTS trading enable, this is a master button which controls whether or not you have positions on or not on. It'll change the status here to enabled or disabled. And what this will do is it gives you an expiration date. And this is right now it's defaulting to the close of the day, so this is good for one day. But if I want this to continue working into next week, I can apply a new expiration date, right? And it tells me, okay, you're about to change this. Are you sure? Yes. And it says RTS trading will continue to work until December the 9th. When that happens, it'll kind of disable itself. And what this means is you can robotically enter positions up until that date. It's very useful because if you plan on being away, it will stop robotically trading on a certain date. So RTS trading activation, setting the expiration date, and then I can go down into that SPY crosses below support. And once again, I want to set the list to SPY because I only want this to trade SPY. When I set that, as soon as I check it off, it deploys this to the server, and now the system is robotically scanning for my rule. When it finds the signal, it's going to, step 1, evaluate my risk parameters, which I'll talk about. But step 2, it's going to listen to the rules of the strategy that I had defined, which are very simple. When the signal is found, it will go long at market, and it will attach a stop order at 0.85% below my entry price. So robotic trading, now I've got a couple RTS strategies trading, and as we were talking it kind of got into these positions. Again, these strategies are kind of based on some really simple ideas, so they trade frequently. But by enabling RTS trading, it allows positions to come into my portfolio, and I can then manage these positions, which again are subject to my risk parameter settings. So let's just talk about that briefly here. When you deploy to RTS trading, it will use the risk settings set for the account using this settings icon right here. When I open up the dialog, I can specify various risk parameters such as account drawdowns. The way these work is account drawdown will look at profit and losses on the day, and if any of these percentage levels are breached, right, so let's take a look at hard drawdown. If the account draws down by this amount, right, this percentage, then what that would do is it would liquidate all robotically traded positions. And remember, settings only apply to related automated trading. They will not touch your manually traded positions, especially if you opened up a position or brought a position over from Thinkorswim. It's not going to automatically modify that position on you. So for automated trading, if it reaches the hard drawdown, it's going to liquidate the positions automatically. And if you hit soft drawdown, that will quite simply not put new positions on. It'll continue to leave those open until, say, maybe the hard drawdown is reached, and hopefully the hard drawdown is not reached. Hopefully it goes back in your favor. There's a position drawdown parameter which looks at individual positions on whether or not the position draws down, and if this individual position draws down, it will get out of that position. There's settings in order to specify what percentage of the buying power to deploy. And then there's other settings that toggle how many shares the automated positions should place on. So for example, this per trade allocation block defines your allocation strategy. And one of the more popular ones is just to do a fixed share size. This would do 100 shares, but you could also do something based on a percentage of buying power, etc. One thing to mention is that this share rounding precision, this is going to kind of truncate your shares. It's become most popular to use the two ones. What this means is if you use, say, a percentage-based scheme, what may happen is if I have $3,000 worth of buying power, maybe I can afford 147 shares of a stock. If I can afford 147 shares, if I use this two ones, it's going to send orders in at 147 shares. But if I change it to tens, it's actually going to round it off. That would send an order in for 140 shares. If I change it to hundreds, it would send it in at 100 shares. And the reason why we added this was so that you could control your fills that you get. Now this used to be more relevant years ago, actually. It used to be much more difficult to fill what's called odd lot shares. In recent years it's become much easier to have that happen, so that's why we kind of changed our default to ones. So just be aware of it, that's there. And also be aware that you've got other limits which throttle the maximum number of trades, right, and the actual trade filters based on price and volume. These risk settings will govern the robotic trading on the portfolio, and it provides you a complete system that lets you perform your kind of multi-step process for finding trade ideas. Scanning, automating, and executing. You can set up all of these conditions, create a strategy. You can send the trade ideas directly into TradeOptics or fully automate them using the Prodigio RTS and portfolio management. So this chat today was really an introductory chat, and hopefully, especially if this is your first time seeing the system, I hope I kind of gave you the idea of what the system does and how you can use it to augment your trading. That said, we're working on a huge build over here where we have a number of things going on all at the same time, and huge builds run into more things that need to get added. So we're working on this build. I mentioned the scanning system. In one of these upcoming chats, I'll be able to kind of show it off. But this really facilitates the step one of this whole process that I was kind of talking about. And it's really, a lot of people agree that most of the scanning systems that are available out there, they can't really do quite what we've been able to achieve here. And we're doing all kinds of crazy stuff on the back end. So it's been a lot of work, but hopefully I'll be able to show you guys that soon. Next week, we'll probably talk about maybe something a little bit more related to the trading strategies or et cetera, or possibly even talk about scanning. But as always, join us here every Wednesday, 11 o'clock Central, 12 o'clock Eastern. And we try to mix it up and keep it interesting. So I hope you've been able to divine something from this. It's always a pleasure. My name is Brian Wagner. I'm the Chief Architect of Prodigio RTS. We're constantly over here pulling our hair out trying to build the latest and greatest trading systems. This chat, as always, is archived on the website, www.prodigiorts.net. And join us here in the chat during the week, the Prodigio chat, and follow us on Twitter, twitter.com/wizardlab. So that said, as always, it's been a pleasure, you guys. Best of luck and great trading. I will see you guys next week. Take care.